In my previous video, I developed an investment thesis about why US small caps should very likely outperform the large companies and S&P 500 indices in the coming months and years. And not only in the video, one was mentioned an ETF that tracks US small caps and ranks them according to value metrics, which is very popular among investors. I mean the accumulative Ucits Etf from State Street tracking the MSCI USA Small Cap Value Weighted Index, most often found under the ticker symbol Zprv. But is that PRV really the best choice for an investor who wants to include quality small companies from the United States in his portfolio? Or do we have other, more interesting variants? Welcome to my Monaco Invest channel, and in today's video, we will look at whether that PRV is really the best small cap ETF if I want to include small US companies in my portfolio. First, let's take a closer look at the index that Zprv tracks. This is the MSCI USA Small Cap Value Weighted Index, an index that selects individual stocks from the MSCI USA Small Cap Index and ranks them not according to market capitalization, but according to so-called value or value metrics. In general, it is a regularly balanced selection of stocks from the index that are currently traded below the intrinsic value and which the investor should therefore buy at a discount. And MSCI's value indexes do this selection for us, without us having to manually select individual companies. Value investing was overshadowed by growth investing and speculation in the last decade. However, in the case of that PRV, from its inception in August 2009 until September 2024, this index managed to outperform both its parent MSCI USA Small Cap Index, which doesn't track any of the commonly available Ucits ETFs, and another method that investors use to add US small caps of caps to portfolios, the Russell 2000 Index. This includes the 2,000 smallest companies from the Russell 3000 Index, or the index that tracks practically the entire American stock market and then ranks them according to market capitalization. As such, Russell 2000 is rebalanced annually with the only exception IPOs or the entry of new companies to the stock exchange. The addition of such companies takes place quarterly. If an included company becomes too large, it is removed from the index in rebalancing. However, more often than not, companies are removed due to the bankruptcy or delisting. It is one of the main risks when investing in small caps. These are often small startup companies or companies that are not even profitable or operating in the red, and for them it is critical to get the cheapest possible financing, which is often driven by speculation and the lust of investors. After all, approximately half of the companies included in the Russell 2000 Index are unprofitable. And it is precisely these unprofitable, loss-making and high-risk companies that valuation investing should reliably remove for me. And I should thus have small but functioning and potentially growing companies included in my portfolio. And as we can see from the comparison of these three small cap indexes, our value-oriented small cap index, shown in red on the chart, clearly wins in terms of performance from 2005 to July 2024. But value investing doesn't always deliver the best returns. Although it can do it in the long term, there are periods, and they can be several years long, when ordinary indexes that include everything or growth investing defeats. And even when comparing that PRV with an ETF on the Russell 2000 Index, we see that those periods exist. Yes, over the past almost 20 years, the value small cap index delivered on average almost 2% more per year than the classic Russell 2000 index. But if we shorten this period to just the last growth decade starting in 2011, then that PRV with the ordinary Russell index would 2000 has been losing for over a decade. Here we see an almost identical growth until the period around 2015, after which the marked dominance of the ordinary Russell 2000 index began. This period is characterized by cheap financing, low interest rates, economic expansion, and a good global geopolitical situation. At that moment, everything grew in value, even loss-making companies. There was also much more speculation in the market. This company offers such revolutionary technology, and therefore its shares are sold at a high price because it's speculation on the future success of the company and other speculative opinions, all of which resulted in a much higher share of capital, which flowed directly only to small speculative companies rather than to valuable ones. This trend was then interrupted in 2020 by COVID, when almost everything fell in the short term. It was something completely new, and no one knew how companies, governments, and humanity would react to this. At that moment, several companies appeared on the small cap scene, the purchase of which was based on the speculation that COVID will be here with us and that we are starting to live in a new normal, which after all was also a relatively mainstream opinion promoted by some governments at the time, was initially an investment that managed to multiply in a few months. In addition, many inexperienced investors became interested in the stock market, which they conceived as a casino in which they want to get rich quickly. If we add to this the factor that we had very low interest rates globally during this period, then it's not surprising that we experienced a general explosive growth not only of small cap companies. Even the valuable companies grew, but the growth of absolutely everything, often to illogical heights with the promise of rocket appreciation in the future, surpassed the classic value investing in small caps. Companies like Peloton, Zoom, and others were the clear winners in the early COVID era. Even though, according to their valuation metrics, it made absolutely no sense to buy them at those prices. And this was exactly reflected in a period that began with increasing inflation and the subsequent increase in interest rates in the fall of 2021. Small caps in general, in the form of the Russell 2000 index, were hit much worse here than the quality value small companies, which did decline but less forcefully, and since then they have been leading efficiently. A similar development could also be observed during the mortgage crisis in the USA, when again at the initial start of the crisis everything fell roughly the same, so that the subsequent rebound from the bottom in 2009 was significantly more profitable in favor of the value-oriented Zprv, at least as far as the backtest is concerned, because the Zprv was launched only in 2015. And we could see the more significant growth approximately a year after the bottom of the crisis. That is a similar situation in which we are now. The bottom of the crisis has been overcome. We have before us a reduction of interest rates by the Fed, an unlikely recession, and a relatively optimistic future prospects. Even the last investable variant in the form of this S&P Small Caps 600 index will not change the long-term dominance of that PRV among Ucits ETFs. And if I want to invest long-term and diversify my portfolio in American small caps, then that PRV within our European Ucits variants is an ideal candidate to add to the portfolio. Value investing works best here in the long term as well, and regular monthly investing instead of one-off investment of a larger amount doesn't change anything. The growth is often almost identical outside of crisis periods, and the reason is simple. While in ordinary larger companies, investors exit and sell shares when they are overpriced or have no potential for further growth, in this case of small caps, there is a significant factor of speculation which can make many valuation-threatening companies shoot to the heavens. And this is one of the important factors that an investor should take into account when he wants to invest in small caps only for a limited period of time and thus take advantage of the current situation. We are in a period when the worst is already behind us, and unless some unexpected and unpredictable event occurs, we will once again be in a period of economic expansion and growth that will likely be linked to various AI or crypto startups that are increasingly coming to the attention of investors, but other sectors will not be left behind either. The small speculative capital will gradually begin to enter the market again, and it will often flow into companies that will be anything but undervalued. And if there is enough of this capital, the ordinary Russell 2000 index can already outperform its value counterpart in the form of Zprv. That's again until the next crisis period. And while the index that follows the Zprv doesn't follow anything else, we have several options for the Russell 2000 to arrange a significant excess return on its growth. Unfortunately, there are no Ucits variants for them. And as an investor, I would have to resort to buying American ETF variants directly. So if I answer the question from the beginning of the video, is Zprv the best small cap Ucits ETF if I want to include small American companies in my portfolio? Currently, it definitely is. It is an ETF that you can buy in the long term as part of diversification and effectively include small quality American companies in your portfolio and ride on their possible future returns. And at the same time, it's also a suitable option for someone who wants to speculate that the period is approaching when small caps in the USA will outperform large companies and indices such as S&P 500. Which from several perspectives on the current situation is something which is quite likely in the coming months or years, which I discussed in the last video. The link to it will be in the description of the video. What do you think about Zprv? Do you have it included in your portfolio, or perhaps its European alternative? Thank you for watching this video. I will be also happy for any feedback, whether in the form of likes or comments. If you don't want to miss out other videos from the world of finance and investing, subscribe to my channel. Have a great time and see you